Hi, this is Jim Shibley from National Property Solutions, and today I'd like to go ahead and present you with an overview of our private lending program, some of the benefits to private lending, especially in real estate where your investments are secured. And again, my name is Jim Shibley. I'm the president of National Property Solutions in Green Bay, Wisconsin. We are an affiliate of Millennium Investments in Cleveland, Ohio, and are currently expanding out into the Wisconsin area. And would like to go ahead and briefly touch on a few things and welcome you, obviously, to our presentation here. We're glad that you're here. We'd love to get acquainted with you. And I do want to spend some time making sure that you really have a real brief understanding of what we have to offer in terms of private lending, what some opportunities are available for you. And I encourage you to go ahead and ask any questions that you do have. Feel free. You can call me directly on my cell phone number there. It's listed at 562-0672. Or drop me an email. Again, we are not making a public offering or an offer or invitation to sell securities. We are not Series 7 licensed. This is strictly for real estate investment. So I do make that disclaimer right up front. But let's go ahead and we'll start taking a look at what our agenda is for today, which is what exactly is private mortgage lending, what's in it for you, how do you benefit, and a few examples that we'll run through on some of the things that we've done here in the past. Obviously, be sure to write down any questions that you do have. I'd be more than happy to get them answered for you. And if you'd like to go ahead and meet either virtually or in person to get more information or to talk personally, I certainly do encourage that as well. First of all, let's touch base with really how does your bank make money today? Because in essence, what we're doing with private lending is we're essentially positioning you to play the bank and to act as a bank. So typically a bank, they take their money in, normally in forms of CDs, typically pay relatively low interest rates, currently probably less than 1%. Then they loan that money out at a superior rate of interest to other people to buy houses, which essentially, in our case, would be me. And essentially what we're doing is we're cutting out the middleman, so you're working directly with us. The private lending program, just a real brief overview, is we buy and sell houses. And to buy those houses, we prefer to borrow money from private individuals versus trying to go ahead and do multiple properties with conventional lenders, which becomes very cumbersome and very difficult. And in return for doing that, we like to pay a very handsome interest rate. We typically pay up to 12%, actually a minimum of 12%, or 15% of the net profit, whichever is greater, in order to use your money. It really is a very simple plan. You'll see as we go through here exactly how this works, and I'll explain this in further detail. But to briefly go into how it works is we go out and we locate a property that we want to buy. We have a very specific formula that we use to ensure that you're protected and that there is a large amount of equity in the property. We borrow from you to purchase that property, and in essence, you don't pay us directly. All funds that we borrow from our private lenders are handled either through our real estate attorney or via escrow with our title company. So those funds are always secured. You're never sending us a direct check for any type of funding. We do have a formal closing then, and then you do get a mortgage on the home with other important documents that we'll talk about here shortly. But the reason that we like to use private lending so much is because the availability of that cash allows us to buy at a very steep discount. Banks today, especially some of the REOs and other distressed properties that we're buying, it makes it much, much easier to get significant discounts if they know that we're coming in and we're buying all cash. So exactly how this works is we come to you here as a private lender who's saying, yes, I have funds available. When you do have a project, please let me know. We're willing to go ahead and fund it for a certain amount. And then what we do is we provide you with a series of documents securing that loan, which would include an actual mortgage, the promissory note, a UCC-1 filing, and hazard and other forms of insurance and title insurance to make sure that the property is secured and that it's being used as collateral, a physical asset, the house itself, as collateral for that particular loan that we're making to you. Then in this example, what we do, one of the options is we may find someone who's working on a lease option, on a short-term lease option, and we actually go out and find that tenant buyer. We either do that, or if we have a complete rehab that we're doing, we'll rehab that house and then put that home back on the market and resell that at full retail value. Normally we're trying to build in a very large spread here. Typically we're buying homes anywhere at 40 to 50% of their after repaired value, because we want to make sure that there's a large allowance there for any rehab work that needs to be done, and we can turn that property quickly still below market value and still clear a very generous profit. Our target typically is about $35,000 to $40,000. But how you typically would get paid in the lease option arrangement here that we have is that lease optioner, or the tenant buyer, is going to be making monthly rent payments, and out of those monthly rent payments is essentially where we're accumulating the 12% interest. Or what we normally will do on a rehab type project is we'll let the interest accrue until the house is actually sold, and then you'll get one check for principal and interest that will be returned to you at closing via the title company, either directly back to you, or for those lenders that prefer to use funds from their retirement account, such as a 401k or an IRA, a self-directed IRA, those funds would go immediately back into your individual retirement account. And what I'm showing you here example is, let's say that you do have funds that are coming from a CD. Say you had a $100,000 CD in this example. Your typical yield from a 12-month return would roughly be about $1,000 on that CD. Where if you decided to lend with us in our real estate projects, we're offering a minimum of 12% or a $12,000 return. Now, we've had some people that are concerned about, well, if I pull the money out of that CD, I'm going to receive, a penalty from that. Well, in our example here, a typical bank 6-month penalty is only $1,000 on that CD. So even that being said, you would still generate a return of over $11,000 or more, even with the penalty. And we structure all of our deals so that there is no withdrawal penalty with us. If you decide to go ahead and withdraw at any time, we have absolutely no penalties associated with that. So let's continue on here with just another example. Again, at $100,000 on what you could expect for your return. At 12%, if we turn that property, and typically that's within a 1-year term. Most of the properties, even our rehab projects, we're typically turning these in about 4 to 6 months. But in our example here at 12%, that would be $4,000 per quarter, 12 a year. And again, with a bank CD paying only 1%, you could only expect $1,000. So right there, that's a difference of $11,000 per year. Now, a question that comes up is, how can we buy houses so far below market value? Well, our specialty is actually going out and locating distressed properties. Typically, most of which need some form of renovation. Some of them are larger than others. Others we call prehabs, which we just need to go ahead and, say, replace carpet, do some painting, etc., to get them back in living condition and they're ready to go back onto the market. But we do know where to look. We know what to buy, what not to buy, more importantly, and how to renovate. And again, we have very specific formulas in place, because if we cannot structure a deal with a seller where we can get our margins, then we simply pass on that deal until they're more motivated, or we find another deal that does fit our criteria. So we're always keeping you as a private lender in mind to protect your interests. We obviously go out and we create value by taking these ugly vacant homes that are eyesores and then put them back on the market after we've completed the renovation. Here are some a list of the documents, and again, I mentioned this a little bit earlier, but you will receive a promissory note, a mortgage, hazard insurance. We do a UCC filing. Make sure that title insurance and appraisal is done on the property so that you know exactly what you're getting. And we do provide these to you in an actual small portfolio, so you'll have literally something to look at in terms of your investment. But in terms of you as the lender, you have absolutely no expenses. Those are all passed on to the buyer. Your biggest concern typically is going to be protection of principal. And again, our number one rule is that we do not borrow money where we don't have on anything that there's higher than a 70% loan to value ratio after it's been renovated. We want to make sure that there's additional security in there because we don't over leverage the property. This is one thing that got a lot of lenders in a lot of trouble back in 2009. But as an example, if the property that we're looking at, the project we're looking at, has a $100,000 after repaired value, our max loan ratio would be $70,000. So we'd make sure that there's at least a $30,000 equity buffer within there. And again, that's typically a minimum, and that's after repairs. This is not what we purchase at. We typically are going to try to purchase at around 40 to 50% of after repaired value, because we know that we're going to need some rehab funds in order to bring that property back up to speed. But essentially, our minimum here is a 70% loan to value ratio after the property has been renovated, before we put it back out in the market. In essence, what's in it for you? Here are some situations that typically you may be in. You may be retired, laid off, or simply just looking for better returns, or possibly even had to quit your job. And in this instance, is what many people don't realize is that they have now some form of retirement plan that has funds in it that can be used to invest in real estate, be it an IRA or a 401k pension plan that could be rolled over if you're no longer working for that particular employer. You can self-direct your IRA or your pension plan, and your returns there would stay tax deferred or tax free so long as the funds that are being borrowed are immediately put back into your retirement plan. It's very simple, it's very easy, and we do all the work for you. We'll set that up if you need help and assistance in doing that. We typically use two companies. One is iPlan Group, and the other one is Equity Trust Fund out of Cleveland, Ohio, and both of them have a vast amount of experience working with investors who are looking to use self-directed funds in order to invest in real estate. You're in control, we do the paperwork. So in essence, you open an account with an IRA, obviously called a custodian, and we roll over those funds from your current custodian over into a self-directed account. Then those self-directed funds are sent to the title company and the closing agent. Once we've completed renovation and we've turned around and we've resold that property, you're earning a minimum of 12% or greater. And typically the way that works is if you have a low value loan or an amount to invest that typically is less than $50,000, you normally would be positioned in a second position and have a second mortgage on the property, in which case we would pay 12%. But if you do have $50,000 or more, where we can essentially purchase a property with one single mortgage, then you'll earn 12% or 15% or greater of the net profit after it's sold. And we'll work through an example there. But when the house sells and closes, the funds are sent directly back to your custodian and then placed back into your retirement plan, and then you simply decide whether you'd like to reinvest those funds again with us or not. Some other options: whole life insurance policies. You can borrow your cash value if it's earning low rates of return. I also know that there are several major brokerages that have plans to be able to borrow against your actual equities that may, say, be producing 3% and you'd like to earn higher. And in our case, at 12%, so by the time that you net, you actually would net 9% on investing those funds in real estate with us. You would have to check again with your individual investment advisor, your investment planner, to see if those types of programs are available to you. But we loan that back out to us. To buy the house, you earn 12% or more. And it really is a very simple process. Now, who exactly do we buy from? We buy from banks in the terms of houses that have been taken back via foreclosure, private individuals that are looking to liquidate quickly, or realtors that simply can't move properties. We also have a lot of properties that come back to us that just simply could not sell. The listings expired. And then we also work with other investors who may have properties to sell, and again, if they meet our margin criteria and they will work with us there, those are potential candidates for us to go ahead and pass on to you as one of our private lenders. Typically people who rent then buy our houses. They're looking to achieve the American dream of home ownership. We've got several plans, especially via our lease option program and our equity for ownership program, where we can literally get them into homes. We take relatively large down payments on there, and then work typically if they have, challenge credit, we'll have them work with a credit repair company to make sure that they can close on the deal, but they have a large vested interest in their property. These are not rental homes. They are purchasing to buy. And many really simply, in today's economy, could not buy without our programs and the willingness to go the extra mile to get the deal done. Another question that typically comes up: what happens to your loan if I die? Well, the business is structured to sell your property and pay you off, whether I'm there or not. So your loan is actually still secured by the property, no matter what happens. In the absolute worst case scenario, if you had to foreclose on the property, it's a relatively simple process, relatively inexpensive to do it, and again, you've got the mortgage, you've got the note. It essentially is, you're in total control of the property, and we built that in so you've got a minimum of a 30% equity buffer in there. So in our example that we were using earlier, your principal and interest would be paid. Say you had sold it at $100,000, that's an extra $30,000 in profit for you in a absolutely worst case scenario. But to date, we've never had that happen, because the way that we've structured our business, these properties do sell very, very quickly, because in essence, once we're done rehabbing, they're the best looking property on the market at the absolute best price. A little bit again about us, our company story. Again, we were looking to, our goal is to grow our company by providing affordable housing to tenants and first-time homeowners. We realize that there's a huge market there right now for people who are renting that would rather have homes, but they simply can't get loans, whether it be to do it to challenge credit or just because of the lending criteria is just too strict right now. In time, our scope is not just encompassed around the local area in Green Bay and Northeast Wisconsin, but throughout the entire state and nationwide in selected cities, where we can literally build teams and have teams in place. So we've got essentially a very long-term strategy, because we don't see that the market is going to substantially change for a minimum of the next 5 to 10 years. So, and probably much further into that. Again, we are a private, for-profit real estate investing company. We acquire, we rehab, we lease residential, primarily residential homes. At times commercial real estate, but typically that is not our specialty. We find that we find much better deals that we can do on a much more often in the residential side of things than we do in the commercial side of things. And we live by basically these three words. It's integrity, it's honor, and respect. I mean, essentially living by the golden rule to treat others like we'd like to be treated by them. These words have real meaning for us. A little bit briefly on my background. I've been associated in the armed forces for almost 30 years. I was an F-16 pilot. I flew 35 combat missions during Desert Storm. I come from a military background. These things, my country, the things that are happening in our country today upset me dramatically, because I'm seeing that these three key components, these core values of integrity, honor, and respect, simply are losing value today, and I simply just will not do business any other way than under those core principles and those core values. We want to make sure that you're treated the same way, and we will do everything that we can to ensure that you are treated exactly that way, the way that you would expect to be treated and should be treated as one of our lenders. We do have a very competitive advantage, and it is because we have the speed to purchase a property very quickly, and we have the knowledge of multiple creative real estate techniques to get deals done where other people cannot get done, where other real estate agencies especially cannot get these done. We are a limited liability corporation. We primarily either hold short-term properties that we're looking to rehab, or long-term lease management, where we put someone into a longer-term lease but help them try to liquidate earlier. And we also work with privately held mortgages, where we work with those people who have large amounts of equity that are interested in owner financing those homes, where we can either take those notes and collect on those payments for cash flow, or we can turn around and, if we have to, either liquidate all or a portion of those privately held mortgages for cash. How to find us? Real simply, our office location is in Green Bay, Wisconsin. You can see that here. Obviously, feel free to visit our website at propertysolutions123.com. And if you do need to email me, you can email me directly at jim@propertysolutions123.com or call me directly on my personal cell at 920-562-0672. When you go over to our website, this is what you'll see. Feel free to navigate around there as much as you want. You'll see we've been doing some updates on this, so we will be getting more properties. It's always, the website is always in a state of flux, obviously, because we are doing so much work. But feel free to go ahead and visit there, peruse through the website as you wish. Make sure and bookmark it, because we will keep updates on there. We also make sure that we have you on a follow-up list, so when you do lend with us, we're constantly keeping you appraised of exactly what's going on with the project, so you know how things are progressing. And these are just a few examples of some of the houses that we purchased. This one here is actually it was in Sheboygan Falls. We purchased that property for $31,000, and then 4 months later we sold that for $74,000. This one was on Chantilly Rue in Green Bay. We actually bought this one as a real estate owned from a bank. Bought that for $103,000, and then within the next 2.5 months we resold that one for $145,000. So again, we've been doing this for a while, and we want to make sure that we are able to continue to do that, and would definitely appreciate working with you and benefiting you from lending with us. What makes our company so unique is that we use proven systems and creative techniques to get the deals done where others can't. Again, speed and knowledge is our focus there. And we've built successful teams that are focused on those 3 core values: integrity, honor, and respect. And they're working diligently each and every day in order to make sure and find deals for our private lenders. The next step, by now you know how this program works. You've got a good basic overview of it and how you can literally start earning 12% or more in your money today. We'll make sure and obviously give you our disclosure statement to show you all the risks that are there. So in essence, what you have is 3 options, and we do hope that you decide to join our team. But in essence, your options, the next steps are really, number 1 is do nothing. This isn't for you, and if it's not for you, that's great. But maybe you do know some people who would be interested in earning 12 to 15% or more in their money by investing in real estate that's secured by a physical asset and not subject to market fluctuations on certain securities that aren't secured. Option 2 is obviously set up a one-to-one meeting with us by contacting me, and we'll either get together virtually if you're out of state. We're more than happy to get online and do a video conference, or if you are in the area or within the tri-state, quad-state area here around Wisconsin, we're more than happy to travel to come meet with you. And option 3 is to simply fill out this form. Basically, it's a commitment form with your name, address, city, the funds that you do have available to invest, and saying that you'd like to get started as soon as possible. Just simply go ahead and print this out, send us this in an email with your contact information. We'll be sure to get back to you immediately and answer any and all of your questions and help get you started. So I do again hope that this was very helpful to you. Have a very base understanding of the advantages of private lending, and we would again love to have you on board. We're here to work for you, and again, please give me a call. Best way to contact me typically is via my cell phone, to set up a time where we can chat more and I can get all those questions or answered that you may have. Again, that number is 920-562-0672, and I'm looking forward to hearing from you.